Welcome to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Dollars and Cents is the show about growing more of what you are making, saving more of what you are growing, and making more of what you are growing and saving in the most sensible and tax-efficient manner possible. Feel free to call into our studio number to be live on air with your questions. Call 408-912-5038. That's 408-912-5038. 5038. And here is your host of Dollars and Cents, Sanjiv Gupta, CPA.
Good evening, friends. Welcome to today's another edition of information-packed Dollar and Cents show, where we deal with all the current events as it relates to the money and tax matters. In our dollar update today, we came to know that California as confirmed to the tax filing date extension. So that's a welcome relief. California of all the states has come out and said that the date for extension, which as you must be knowing, that date has been extended from April 15th to May 17th. If you are an individual tax filer, the date is May 17th. But California has not come forward with that one. Now they have come forward and said they are confirming that date. So there's nothing to worry on that front. So that's a welcome relief. But we are still waiting for California to have PPP loan forgiveness expense deduction to come forward and tell us what should be done on those expenses for California tax returns for S corporation, LLCs, and C corporation. A lot of people, a lot of business owners have got PPP1 loan and they applied for forgiveness. But we know for federal tax purposes, those expenses are allowed for double dipping on the federal tax returns, but California has been delaying it to arrive at any decision on that one. Reason for that is they are going to get aid from the federal government as part of the American Rescue Plan provision, which provides relief, which provides assistance to the state, and one of the state funding is the state California, big support they are getting from the American Rescue Plan. So one of the provision that it says that the money cannot be used. If you get federal funding, it can be used for tax cut. Now, there's a confusion that exists in that line. They've asked for more clarity from Treasury Secretary Janet Yellen, and we are waiting for that clarification coming forward from Treasury Secretary. So as of now, we have to hold on to those tax returns for LLC, S corporations, and C corporation, which have received PPP loan and applied that loan for expenses. For California tax purposes, we have to still hold on to that. But we have an extra month for filing individual taxes. Maybe in the next week or two, we might hear something on that front as well. By the way, do you know that IRS has about 9 million returns still in the pipeline to process? They are working very hard to process those returns. So if you're one of those tax filer who's waiting for the refund to come in, have not seen the daylight, and I'm calling the IRS madly, one after the other, every day in the morning, not able to get through the lines and hanging on the lines and continue to call and hold on for 2 hours, 3 hours, and not able to succeed to get any agent on the line. It's better for you not to call at this time, because the IRS has come out and said they are working on those returns which they have received via paper mailing or amendments, and there's no need to call them. So just they're saying, have patience, let them work through this backlog of 9 million returns, which they are still working on that. If you received a notice from the IRS and you answer that notice, hold on to calling the IRS if they have not taken any action on the response that you've done to that notice. Give them time, at least 3-4 months or 6 months, basically. I will suggest 6 months. They are working on the economic impact payment, the third installment of the stimulus payment, which already one round has happened. Today they started the second round of that stimulus payment. It might come via check, direct deposit, or a debit card, any option, any way that will come to your and hit your account. If not, use the irs.gov. Go to the irs.gov website. There's very important tools out there. There's Get My Payment, Get My Refund, or Get My COVID-19 relief status. Very important tools out there on the website. I would suggest you to go there and see. Of course, when one of my clients that went there and said, "Hey, whenever I go there, it says pending or under processing. It does not give more information." Unfortunately, that's the only way you can connect with IRS at this time. If you're successful, you can get an agent. You can get things done. My name is Sanjiv Gupta, CPA. I'm practicing in Fremont, Sunnyvale, and Pleasanton. I have a team of experienced CPAs, CAs, and EAs, and accounting professionals who have been doing successfully filing for a lot of individual tax filers and business tax filers. We deal with all complexities, whether it's U.S. related tax matters, foreign related tax matters, particularly India. My team members speak multi languages, and we are available year round, not only during the tax time. So that's the benefit that you get for working with a firm that has CPAs and EAs and speaking languages and also working the year round. If you have any question at this time, tax question, the studio lines are open. The studio number is 408-912-5038. 408-912-5038 is our studio number. It's a tax season. A lot of questions are there in the mind of the people, and they want answers to those questions. It's becoming messier. Last 1 year, 4 to 5 big acts have been passed, and people are confused. We are confused. CPAs are confused. The tax preparers are confused. All people are confused. But because we go into details of everything, we know what is happening out there, and we really help our clients to navigate through all the nuances of all the changes that have made through those tax rule changes. So if you have any questions, this is the time to call the studio number 408-912-5038. 408-912-5038. In today's dollar topic of the show, I'm going to talk about my upcoming webinar, which is on foreign account reporting and foreign asset reporting requirements. Very important webinar, very critical webinar, I will say, for a lot of people who have assets back home in India or in any other country and not sure what to do with those assets and reporting of the income from those assets. Several complexities arises with reporting those and residency requirements of both the countries, particularly during COVID. It becomes more and more serious. The laws have changed in India relating to status of residency requirements. So what are those changes are out there? Need to understand those things. First of all, we need to understand the foreign asset. A lot of people have questions, but what assets I need to declare? So when we talk about foreign asset, it can be any kind of an asset. It can be like properties, it can be stocks, it can be insurance policy, it can be bank accounts, FD, CD, RD, retirement accounts. In India, we have insurance, we have PPF accounts, ULIP accounts. So we have Kisan Vikas Pattra, all this kind of liquid investments out there. So when we talk about foreign asset, we talk about anything and everything relating to assets. Now, what about the personal assets? Let's say car, let's say jewelry. So we are not covering those personal assets. We don't count those personal assets for reporting tax purposes or reporting on the foreign farms. We report other than those personal assets. We also don't include the real estate for declaring on the FBARs, which is a form that we use to report those foreign assets, and the Form 8938, which is a FATCA form, Foreign Account Tax Compliance Act, which came in 2016 and changed the entire scenario of reporting foreign assets. it forced the foreign banks, foreign institutions to report those accounts, to report those holdings which are held by the US citizens, US green card holders, US resident aliens, to report it in a manner that they need to report to IRS. If they don't, there's a hefty penalty for them. They have to pay. Uh, they have to pay hefty, they have to pay a tax of 30% for any dealings, any income that they derive on the US stock market. And for them, the US stock market is a big market for any financial foreign institutions. They don't care about you, of course. They care about those taxes. There's a hefty penalty of 30%. That's why there's a lot of information gathering and sharing between IRS and CBDT, which is Central Board of Direct Taxes, which deals with all the disclosures in India. So if you're that person who are holding those assets and have been holding those assets for a time they were here, but have not reported because they were filing online or they were dealing with tax preparers who does not understand the foreign requirements, how does those things work in the foreign country like India, because they're not professionals. They are not basically chartered accountants who understand the rules and regulations, which are complex in India. As we see the complexity here in the US, the complexity of tax regulations in India is much more complex than the US. Let me put this way. So if you're one of that person who have those assets not reported properly, then what are the ways to become compliant? How to take use of the amnesty program and declare those foreign assets, file the FBAR, file the FATCA form 8938. And people have invested in mutual funds. Lot of investors out there who make a lot of money, a lot of return, because they invest in SIPP scheme in India, or they or any other debt-related scheme, tax saving scheme in India, and they made money, but they have to report it as a national income on the form 8621, which is a PFIC rules form. What is this? Why we have to pay tax on the national income? But that's what the requirement says for the PFIC rule. By the way, if you have any questions at this time on any foreign account reporting or any other question that you have on employment compensation or retirement accounts, IRA, 401ks, this is a time to call the studio number, which is 408-912-5038. 408-912-5038. So when it comes to the mutual fund, a lot of people ask me this question: does it really make sense to invest in foreign mutual funds? I will say no. Why are you doing that? First of all, there's a problem of transferring money from here. Where to transfer money? NRE account. A lot of people don't even transfer to NRE account. They transfer directly to the investment account. Then there's a problem of reporting, reconciling those items on the India tax return and US tax returns. In India, if you're aware, there's new law that changed how the taxability of mutual fund happens. There's a 10% tax on the foreign mutual funds if it exceeds 10 lakh rupees. So that's also is hindrance to investment in foreign mutual funds. Then the question comes about repatriation of the proceed after you sell that mutual fund, because in India there's a regulations on how much you can sell, how much you can transfer money, but the RBI guidelines and the FEMA Act regulations. So if you have those restrictions and those complex reporting requirements, what is the need to invest in foreign mutual fund? Of course, the people will come back and say, hey, I'm on H1. I don't know anything about whether I can. I don't know. I'm not sure whether I can stay here. So I need to invest there. I have a caller here. Let me take this call. Good evening. This is Sanjiv, Gupta, CPA.
Hello. Hi, this is Hemant.
Hi, Hemant. How are you?
I'm doing good.
Yeah, go ahead with your question, please, Hemant.
Yeah, so my question was sometime back you were telling about the FBAR FATCA, about notional income. So even we don't have redeemed our mutual funds in India, do we have to still report, because there is no interest or any kind of any kind of income on those, right? Just an NAV value increases there.
Yes, yes, very, very good thing about that. And this is one of the reasons we have this webinar happening on this Saturday, March 27th. So the thing is, if you invest your money here in the US and look, if you invest your money here in the mutual fund, when you get a 1099B broker statement at the end of the year, you see there is a line that says capital gain distribution. That capital gain distribution is what the increase that what the mutual fund company had declared as income to the mutual fund holders. So mutual fund company do close their books in a calendar year in the US, but that does not work for foreign mutual funds companies. That's why we have the portfolio this PFIC rules applicable to that, so that they are on par with what is happening in the US. That being said, now we have to compute the notional income. And notional income, like you rightly said, is about computing the increase in the NAV, net asset value, opening balance, and ending balance. So you have to pay that. If there's increase in income, increase in the value, you have to declare that income. You have to choose the proper format on the form 8621 is mark to market or average cost method. So you have to choose, you have to select proper, do the proper selection on the form 8621 and declare that income and declare the mutual fund on form FATCA form 8938 and F bar. And if you have a loss in the NAV, you cannot take the loss. You can only take the loss to the extent of the income declared so in the earlier years on those mutual funds. This is how this rules work. It's a complex rules, uh, but that's how it works out. Okay.
Okay. Thank you so much.
Thank you.
Thanks for
Thank
your
you. Really,
time.
that's was an important question. Mutual fund people have invested. Like I keep saying, we get a lot of calls and a lot of consultations on those foreign mutual funds investment, how to do that. So when we talk about other asset, those mutual funds, other than mutual funds and FDs, interesting FDs, a lot of people have FDs in RD and RO account. And so there's different way of reporting the interest income. Either you can report the interest income every year on accrual basis, or you can report the interest income at the time of maturity. It will depend upon the amount of the amount of income. For example, if the amount is invested is high amount, interest income is also very high. It's better to declare it every year rather than paying big tax on the income that comes at the end of the year. By the way, we are getting information that President Biden is going to look at this foreign income declarations in a different way. It's going to come out with tax increases, which all are looking forward, which we know that is going to happen, but we don't like it. Whether we like it or not, that's different. But that's going to happen very soon. A lot of people do ask me this question: whether that tax increase will be for this year or next year. We have to say and we have to wait and see. But of course, if something comes out, I'm here for you guys. I will definitely make it and declare it on air so that you can take the benefit of what's going on. But keep your eyes and ears open for this kind of changes in the tax rules, which are going to come shortly, 3 months from now. So coming to this discussion of foreign income, foreign asset. So foreign asset, definitely, what about the life insurance policy? People have a lot of insurance policies invested in India. Like I was telling about I was talking about the H1 case scenario when people say, I want to invest money in India. Insurance policy everybody has insurance policy in India. We might not have insurance policy here, but we will have definitely insurance policy for self, wife, kids, everybody. Because our parents back home, they like insurance policy because in India, insurance policy is one of the safest and secured investment we have gone through. LIC made a lot of money in India. We have a caller here. Let me take this caller. Good evening, Sanjiv Gupta, CPA.
Hi, Sanjiv. Thank you for taking my call. I have a question regarding 401k versus Roth 401k.
Go ahead.
If I'm already in the high income tax rate, does it still make sense to put some money in Roth 401k?
That's a very good question. To balance things out between 401k and not 401k. So if you have a high income, you have to really look at the things of getting some deduction. So let's say you're less than 50 years of age, you can do up to 19,500. So it's better for you to put some money into 401k, traditional 401k, maybe 10,000, 12,000, depending upon highly compensated employees provision they allow, and then do the rest in the Roth 401k. That's important because that Roth 401k can be rolled over into Roth IRA when you leave the job or something. But definitely Roth 401k is important provision. If you can get it, do it. If for high income earners, but do also put some money to tax deferred 401k so you can get some tax benefit from that as well. Okay.
Okay. Thank you, sir. Thanks a lot.
Thank you. Really appreciate for the call. Any other caller, you can call. You can always call at the studio line is open 408-912-5038. 408-912-5038. We are coming to very close of the end of the show, so this is the time to call the studio line. Talking about foreign income, we have to report the foreign income from those assets like interest on those FDs, like I was talking about accrued basis versus cash basis. What about the rental property? So foreign, we know the property is not reported on the FBAR 8930, it is taken out, but any income arising from that property, whether it's in the form of rental income or capital gains. And a lot of people have this question on selling the capital gains arising from sale of property. That's a major thing that happens every time. What is the repatriation rules? What's how the tax is calculated in both the countries? What is the basis of reporting? What is the credit that you get on those here? How to bring money from there? What are the forms that we require? All those things will be declared, and then we inherit those assets. We have inherited from the parents, we get gifts from the parents, we get gifts from our siblings in India. What are those forms 3520, other forms that needs to be reported? So we're going to discuss in detail at the webinar, and recent changes like I was talking about, changes relating to residency requirement of non-resident Indians. 120 days now. Earlier it was 182 days, but now changed with a lot of changes out there which are happening. We are so much engrossed in changes here, but we forget that India also is changing very fast. So it's going to be a webinar with a lot of details covering those foreign asset and foreign income and complexity relating to filing those the taxes. And then people have not filed the India tax return too. They don't know that they have to file the Indian tax return. They should be filing the Indian tax return to get the credit. What about those people because of COVID? They are US citizen, green card holder who are stuck there. What happens in this scenario in COVID? We are going to cover that as well. So it's going to be all in all webinar for a lot of people who have foreign assets, foreign income, how to become compliant, how to report income, COVID scenarios, Indian tax return scenarios, changes in Indian tax rules. One of a kind, very popular webinar. We have about 180 people registered already. We have a capacity of 200. We might have to extend. We are coming to close of that show, but if you have any last minute question, this is a time to call the studio line 408-912-5038. 408-912-5038. So this is for registration for this webinar. This webinar is happening on Saturday. This Saturday today is Wednesday, Thursday, Friday, and 2 days later is Saturday. So March 27th is the date. Time 10 to 12, 2 hours, free. If you can attend free, there's nothing needed. You are not going to come in person from your home. Understand the rules and regulations. Get the benefit of it. For registration, you have to go to the website sanjivcpa.com. That's SANJIVCPA.com. If you have any questions relating to taxes, wants to do your taxes, wants to looking for appointment relating to taxes, wants to do a PPP loan forgiveness applications, wants to understand the complexities of the laws and changes, and wants to set up a consultation appointment, definitely you can call my office number, one number for all 3 locations, 510-825-7563, 510-825-7563. And with that, I thank you all for listening to my show, and see you on this Saturday, March 27, on the webinar for foreign income reporting and foreign asset reporting. With that, thank you.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topics, you can get in touch directly with Sanjiv Gupta, CPA, by calling 510-825-7563. That's 510-825-7563, or visit sanjivcpa.com.
If your business has made a lot of profit and you are looking for ways to substantially reduce your tax liabilities by taking the full benefits available under TCJA and the CARES Act, then set up a consultation appointment before the 2020 tax year runs out. Call